All right, Wednesday, June 14th. We had weak sales come in, and debt markets took off flying along with metals. So the deal here now is that here's the YM from last night. Uh, we're going to open up off of some pivot areas here. We're getting to be a little on the overbought on the stochastics here on the 2 hour. We did get a breakout here. Like I said, the Nasdaq and that still having issues coming through here. Where am I going here? Come on, you. All right, running through them real quick here. Heating oil. On the oils today, we have EIA. Besides commitment of traders here, looks like kind of a saucer bottom here. This is on heating oil. Gasoline. Gasoline, same type of deal. It's a little on the soft side here. Now, retail sales, 70% of the U.S. economy is sales, 25% of that is autos. After February, July is the slowest retail month of the year. So, retail sales to make it up for July would have to find it would have to be kind of a counter seasonal on here that we'd actually make up for June sales in July. But like I said, July is the second worst month for retail after February. For right now, how I'm looking at this is that if sales are down, that's going to affect equities. But equities are still doing it's still in their head. Here's a bad data, and equities should sell off since 70% of the economy sales, retail sales. Platinum. Seeing if we're getting a bounce here. We are getting a bounce in the metals. See if the white ones come through. Platinum, palladium. Palladium here has had a pretty good run. This was, I thought, would probably be a pretty good topping spike for now. This does look like a short-term bear flag on here. Head on down here, probably takes them at the happy places that approaches $800 here for palladium. Natty gas. I'm in Arizona. We're getting a heat warning. I'm gonna guess that we're gonna bounce off of this level down here, and the targets again up on here. What would typically happen is when you break out of a sideways channel, like we'll call this a jab. If this does hold, if say the 290 area does hold, it would blast through the other end, and so that would be probably somewhere in the I would have to say like 211, 212, 13, 14, 15 areas. Somewhere up in here would be the first round of short covering. The traders did take out a bunch of their long positions in natural gas. Remember, the speculators or the hedge funds were really long natty gas. So I'm looking for, there should be just enough on here to probably push it through the other direction for right now. That's how I'm leaning. It's not as much as we're getting a heat warning. I think we're going to hit 115. I have my windows open now, but it's been dry, so it's not so sticky in the morning for right now. Nikkei futures does look like a bear flag on here. How I would lean, though, is that depending upon the FOMC, retail sales are soft, so the Fed's basically made up their mind. But like I said back in May, 100%, the people thought there'd be 100% of a rate hike. I don't think retail sales will hold them back on a day like today, but you never know. Like I said, we've had a string of economic slowdowns here since April. Cars that should be selling, and that. Here's the Nasdaq that made it back about halfway here. You saw that the ES was poking its head through, and the Dow the same thing. So, you know, now all of a sudden we're getting divergences in some of the indexes here. So I would be very careful if you're whatever stocks you're buying here, because we throw another, you know, throw July retail sales in there. Now we have 2 months of softening, and we're beginning to work on recessionary type talk. Silver we did get up to here, so I'm gonna say I'm up a penny or two on here. Is this being an average? What do we have? 72. What would it be? 17, 30, and the 20 is 50. So another push through here. It would probably flatten out everything on here for right now. On silver, ultra bonds, they all got spiky up here. What do you think, Cal? That's a pretty good volume move here. This could really get out of hand here. It'd move up through the top end. What do you have, though? You do have right puts here. And against it, you should take part on here. Excuse me. Any more short covering, though, or FOMC is going to push this through the top end, though. That's what you would wait for. So I guess you'd actually just set some alarms to trail down from underneath on these here. This is, like I said, this is going to be kind of a toughie here. Everyone's looking to go in on 100% rate hike, and then all of a sudden you come out with a bad number on the day of. So a lot of these moved hard. That's a lot of short covering in there with the bad data. You know, everyone was positioned for a rate hike, and the markets were beginning to move that late last week and earlier in the week. What are we up to here? We're up to 30. Remember I said we'd probably have to do a couple of rounds of sells up in here. And that was the high up in here, 32. See if it does it one more time here. Comes back through and it's a new high. It's at 32, 31. See if we get one at 31, minus 21, 331. See if one comes through here. And then the third time's the charm up and further up here. Because the angle here in equities is that they'd keep interest rates low, right? So you can actually continue to borrow money and buy equities. That's what they do. They go to the bank. What are you going to do? I'm going to buy a stock. Okay, here's your money. You know, basically it's a broker's loan rate, but you know, there's other ways of getting however you get your cash. ZB, all the bonds, see, they all came through spiking out. You know, I talked about yesterday coming through here. The gut is to go after this at the first round. 55. Did we get up to 55? We came up a little short. Oh, what's this one here? Gosh, they pushed through 155.04. Have one just resting here, because this is all going to be short covering. I think here going into the FOMC. This is painful. You think about it. You get forced out right before the Fed, and then all of a sudden there's the wash the other direction. If by chance the Fed doesn't do anything, there's going to be a lot of pain in the bond market, and that would be an opportunity to go in there. For option players, probably TMV. You could short the puts if the Fed doesn't come through. Here's corn. This should get some reaction here to the heat. I'm not sure how far the heat goes across the country, but I just know that we have a warning here for a week. Gone from some 70s at night to now it's going to be 115 during the day. Fives really took off. This is this massive short covering here. Massive short covering here on here. I did pinch the twos, but not the fives on here. The twos were on the front end. Didn't get as high on this. I'd have to short one of these here. Minus 118. 18. How the market reads is that we're doing the whole recession thing. That's how the market's beginning to. You have to give this a few days now to see how this works out. Zuckerberg's wife drops a bombshell, whatever that is. ZL, okay, so we have bean oil here. Okay, so you have to get the beans out of the ground for the oil here. And the other thing, too, if the beans are cheesy, they crush them into meal and oil. So this one does look like a fade here, but I don't want to get caught up in the any type of with the heat type deal here. So I would probably wait though. Maybe get something for December. Soybean meal, on the other hand, that one looks like a bear flag too. Notes took offline. Notes took up, actually spiked the upper end here at 30. This is swipe the top. I gotta take it. 129. What is it? 30. See, there's going to be some pain here. So this one, you're going in front of a freight train on this one here because everybody who positioned for the Federal Reserve now just. But I'm just going off the top that it's swiped up in here. So here, I guess from doing some call writing, doing some put writing, do some call writing. So what is this? 126 call writing. All right, 129. Oops, come on, you. Beans, like I said, with the heat and everything, beans are a little bit later in the push here. So today is going to be an interesting morning, so be very careful, like I said. But if they're going to run into debt here, buying equities here, it's going to be a rough go on this here. Take part at 108. Okay, so we did. Here's the twos. All right, so the twos came down on here. This was just because it just the chart looked right. I just thought that maybe we'd get a run back into debt, walking into the FOMC, and they didn't walk. They ran something fierce here. And we blew through the upper end here, 106.07. Okay, take part 108 point. Oops. 067. Alright. 108 Kev. Okay, so that's selling off the parts there. Alright. Anything above up in here, 108.08, then I would probably start leaning towards the long side. But if this continues into next week, then the marketplace is looking at a recession. And then you definitely want to kind of avoid the situation on equities. Like I said, on any strength this morning on equities, what I would do is the world famous buy or write, if you're long certain stocks, write June and July calls and then buy August and September puts here. All right, wheat. And of course that screwed up the dollar here. So the dollar's now in a tough situation. Down to the Federal Reserve, we have interest rates on all fronts cratering, so the dollar does too. So this should be a pretty good, washout here. I just due to the fact of looking at this, you have to go back and watch the dollar on this move here because it all comes down to the Fed raising rates here. And this is going to be a sticky wicket. Like I said, they usually have made up their mind here, but the marketplace is definitely telling them that they don't like it. That would be ZQ. ZQ is the Fed Fund futures rates. Money came flying into this thing here, so they're pushing this back here. Now we're at 1.13. So, like I talked about yesterday about having difficulties with the way longer in 2020, we're running into problems here. They're coming back out of this thing. This would be really interesting if interest rates don't move today. British pound in that nice, getting a bounce here, but we're about halfway back on here too. So there's not that follow through like you'd see in the euro. Canadian dollar has had some follow through from the night from overnight here, continuing on. Remember that the commitment to traders report was released short on the Canadian dollar, so that's why it's going the other direction. Even though people are dumbfounded about the Canadian dollar and oil, it's basically it was the market set up. That's why it went higher. You wouldn't, if you were watching oil play the Canadian dollar, you got it all wrong. But it was the commitment of traders. Too many people were short. Record amount of people were short. The euro here went off of, it got a spike also versus the dollar here. So in my eyes, what I would do is I would look for something, you're looking to have them swipe the stops up in here and then add into the short department here. Because there's going to be some hope on here. Well, it was just a seasonal blah blah blah. But like I said, we're struck April, May, June. We're stringing that's 3 months of economics. Things are slowing down. So Japanese yen, same thing, got strength, so it came off. Remember, Japan's economy is greatly improving. So. And on the Mexican peso, the peso is doing its deal on strength-wise. Oh, we did bang up against something up here. Take one more up in here. Minus, come on, minus, whoops, 0.05. 560. Because what will happen is if the Fed does come through today and raise rates, that'll cause money to come back into America. But like I said, it's the bad data for retail sales, which is a huge thing for the economy, comes in soft. That's not a good thing. Of course, should be affecting things like Amazon, right? That's another one too with the Bitcoin deal, is if they're using Bitcoin for transactions and stuff, how are they going to like the recession, that kind of thing. Come on, you. All right, so Amazon. And it comes down to that. How's it going to like a recession? This is kind of setting up as a bear flag here. And the Kiwi, I think, blew through. Come on, Now we're up to 73 on the Kiwi. See, all of these got a spike. Well, that's a pretty good move since that mark. We're working on the 4-3 here. 91 minus 72, 91. I gotta go find my stuff. Take a look at this here. 94. Alright, so we're getting a round number here and a spike into the upper linear regression here. We are getting the ADX to turn up here though, but it comes down to once the marketplace opens up and see, because we're waiting for how the equities are going to handle this here. In theory, the equities should be down, but they're going off of, they might not lower interest rates. That's, I'm sure, what the talk is. Swiss franc. Crude oil, like I said, we have EIA today, just looking for some sort of swing higher for right now. The theory, of course, is that they're going to continue to pump money into the economy here, hand out the free cash. Like I said, but they come back through the bottom area here, the old run to the hills kind of thing. And we're back to gold. Okay, gold had a pretty good run up from the spike low here. Alright, so this should be interesting here. If everything's swiping that stops, I just have to swipe the previous highs. I gotta kind of let this thing run. We're getting heavy volume on this here too, so for me, I'd let this just move. Remember how we had our stops down to 62 or whatever, and I added in down here at 63. Move your stop up to here's like 68, and that's how we're gonna move stop up. Yeah, come on. Move stop, 68. This may be because what it is you end up with the market just, why is gold up? Well, because the shorts are covering something fierce. You saw in the dead, all of a sudden gold's at 1320 for no apparent reason, and the Fed raises rates. It doesn't make sense. Just trade the chart. Back to YM again. Yeah, stall out there. I got a lean that you wanna maybe buy, because you're basically, once this thing starts up, You know, if it does roll over, it'll be precipitous. There's palladium and hogs and stuff. Okay, all right, and then there we go. See, we got natty gas now to turn positive here, so we should get a run up into this area here. I'll let you guys go. Have yourself a wonderful day, and I'll continue to send you